Have you ever wondered if cash might disappear completely in the near future? With the rapid rise of central bank digital currencies, or CBDCs, that question is becoming increasingly relevant. But what exactly are CBDCs, and could they really replace the cash we use every day? Let's break it down. CBDCs are digital versions of a country's official currency, issued and regulated directly by the central bank. Unlike cryptocurrencies such as Bitcoin or Ethereum, which operate on decentralized networks and can be highly volatile, CBDCs are centralized and designed to maintain the same stability as traditional money. Think of CBDCs as digital cash, money you can use for everyday transactions, but in an electronic form stored securely on a blockchain or other digital ledger. One of the main reasons governments and central banks are exploring CBDCs is to make payments faster, cheaper, and more efficient. With a CBDC, transactions can happen instantly, without the delays or fees associated with traditional banking systems. This is especially important for cross-border payments, which can currently be slow and expensive. CBDCs could also help bring millions of unbanked people into the formal financial system by allowing them to access money and services with just a smartphone or digital device. CBDCs also offer improved security and transparency. Every transaction made with a digital currency is recorded on a secure ledger, which helps reduce fraud, money laundering, and other financial crimes. Central banks have full oversight, which makes it easier to enforce regulations and ensure trust in the financial system. However, privacy concerns are a big topic when it comes to CBDCs. Because transactions are traceable on a ledger, some worry about government surveillance and loss of anonymity that cash provides. Central banks are aware of this and are working on ways to balance transparency with privacy protections. But this will likely be an ongoing conversation as CBDCs become more widely used. But will CBDCs replace cash entirely? While digital currencies have many advantages, cash still plays a crucial role in many societies, especially in rural areas or among people who prefer physical money. Access to the internet and digital devices is not universal, so cash is likely to remain important for years to come. Most experts agree that CBDCs and cash will coexist, with digital currencies gradually becoming more popular as infrastructure improves. Several countries are already moving forward with CBDCs. China's digital yuan is one of the most advanced projects, with millions of people using it in pilot programs. Other countries like Sweden, the Bahamas, and Nigeria have launched their own digital currencies or are in advanced testing phases. Meanwhile, the United States and the European Union continue researching the possibilities, but have not yet issued official CBDCs. In conclusion, CBDCs represent a major shift in how money works. They offer faster, cheaper, and more inclusive financial services, but are unlikely to eliminate cash entirely anytime soon. Instead, digital currencies will become an important part of a broader, more digital economy. If you found this video informative, please like, comment your questions or thoughts below, and subscribe for more insights into the future of finance. Thanks for watching.